Lastly, we've worked for many years to get to our current growth phase in our detergent polymers, and we are off to a very strong start for 2025.
Hello, you're watching Proactive. I'm joined by Itaconix Chief Financial Officer Laura Denner. Laura, very good to speak with you. What are the tariffs that Itaconix is facing?
Thanks for having me. So there's both import and export tariffs that we've been kind of assessing in the early part of this year. So as far as the import tariffs are concerned, there have been several announcements that have been made that we think will impact our raw materials. So in February, they announced a 10% tariff on all Chinese goods. Then in March, they came back with an additional 10% tariff that will be imposed on all Chinese goods. And then finally, in April, the reciprocal tariffs were announced. So as we start sifting through all these announcements, we found that one of our minor raw materials has a pretty significant impact from these tariffs, while we have other raw materials that are completely exempt. As we look at the export side, we do export to Canada and to the EU. Our sales into Canada are actually completely exempt from the Canadian tariffs, but we're still waiting to hear on any announcement of what the EU tariffs might be. So while we can export our materials without any issue, our customers might face import tariffs on their consumer goods if the final destination is the United States.
What negative impacts have these had on Itaconix's business?
So we haven't experienced any negative impacts yet, but unfortunately, there are a lot of unknowns about what the tariffs will do to the global economy. And I think this is causing a lot of panic for investors. But if the current tariffs remain, we expect to see a modest increase in our production costs of maybe 5 to 15% by the end of the year. This increase will really be driven by the tariffs on Chinese goods. We have one minor raw material that we are seeing over 100% tariff on. We use this in a fairly small amount in our finished goods. But as it relates to itaconic acid, which is our major raw material, the current tariff is about 25%. So even at these tariff levels, our itaconic acid pricing is still about 50% lower than the pricing we experienced during the pandemic. So this is a cost structure we've seen in our not too distant past, and we've been able to kind of manage through these costs.
Any positive effects?
Actually, yes. We've seen the euro strengthen, which is positive for our EU sales. We had about 30% of our sales in EU in 2024. We sell in euros in Europe, so this will help us maintain our gross profit margins in this geography. We're also seeing some geographic movement of US detergent production. For example, one of our major brands is moving most of its production to the United States from Canada. And lastly, we're also seeing an uptick in inquiries about alternative sourcing for US detergents from retailers. So either they're looking for dual sourcing or a way to mitigate some of the impacts of these tariffs.
How is Itaconix responding, Laura?
So we are working with our supply chain partners to find cost savings and cost sharing to maintain our gross profit margins. We're doing this through either getting better pricing on transportation costs. We are looking for some maybe domestic supply of some raw materials, or we're sharing the impact of the tariff with some of the manufacturers. We're also reviewing our customer pricing. We deferred price changes in late 2024 due to the likelihood of new tariff policies. So we will most likely go back and do some selective price increases to make sure that we maintain our gross profit margins. Lastly, we've worked for many years to get to our current growth phase in our detergent polymers, and we are off to a very strong start for 2025.
Are these unprecedented times for Itaconix?
As far as the demand for our polymers and our ingredients, yes, we're seeing a very strong growth here. We've been dealing with challenges from tariffs since the inception of the business. In 2009, there were some anti-dumping tariffs on citric acid. This indirectly ended the production of itaconic acid in the United States. In 2018, there were 25% tariffs implemented on many Chinese goods that were imported, and these are actually still in effect today. And then lastly, we all experienced the global pandemic. This probably had the most significant impact on our raw material costs, as we saw pricing for containers move from $5,000 to $25,000 per container. So we've been through tariff issues before and trade disruptions. throughout the history of our business. This is just kind of the newest iteration of business challenges that we've got to manage through.
Laura, what's the outlook?
So we remain confident in our outlook and the market expectations for 2025, but ultimately this will be a wait and see what happens with tariffs and what trade policies come to fruition in the coming year. But overall, the business is off to an excellent start in 2025, and we will continue to carefully monitor customer order patterns and be as proactive as possible for any changes we see that will affect the business.
Laura, I hope you'll keep us updated on any progress. Thank you very much for taking the time to speak with us today.
Thanks for having me.
You're very welcome. Laura Denner, Chief Financial Officer of Itaconix.